Everyone, welcome back to my YouTube channel. This is your Manisha, and in today's video, we are going to solve one long question from the Risks and Uncertainty chapter. And the question name is Sifter Haulage. This is from December 2008 attempt. And this is from the Kaplan Kit of Performance Management, also known as F5. So, as I am getting requests from my viewers that they are struggling to solve this question, so it was quite difficult for me to choose which question to solve. So if you have any specific question, do let me know. It will be easy for me to record the video. Otherwise, looking by myself, like it will be like more time consuming, and it may take a more time. And as you know, exam is very near, so let me know the question name so that I could focus on that particular question only. All right. So in this video till now we will do this question, and question name is again Sifter Haulage. So Sifter Haulage is considering changing some of its van to use to transport carrots for the customer. The new van comes in the three size: small, medium, and the large. So there are three kind of van and assets. The company name Sifter Haulage is unsure about which type to buy. So a company is in the confusion, which type of van should I buy? And the capacity is 100 carat for the small van, 150 for the medium, and 200 for the large van. Demand for the carat varies, can be either 120, 190 carat per period, with the probability of high demand figure below being 0.6. So they have also to attach the probability. The sales price for the carat is 10 and the variable cost is 4 per carat for all the van size, subject to the fact that if capacity of the van is greater than demand for the carat in a period, then the variable cost will be lower by 10% to allow for the fact that van will be partly empty when transferred carat. So what does this mean to say? So sales price per carat. So if my demand is 120, suppose, so selling price will be 10 for 1 carat, and for 120 we will multiply. Similarly, they have provided the per unit cost and the selling price figure for all van size, subject to the fact that if the van capacity of the van is greater than the demand for the carat in the period, then the variable cost will be lower. Variable cost will be lower by 10%. That means if the capacity is greater than demand, right? In that case, the variable cost will be lower by 10% to allow for the fact that the van will be partly empty when transport carried. And it's obvious the fact. So if your capacity is more, demand is less, so the van will be empty. Some portion of the van will be empty. So that's why they are lowering the variable cost. ACCA is concerned that if the demand for the carat exceeds the capacity of the van, the customer will have to be turned away. So if demand for the carat is more as compared to our capacity, then customer have to turn away. ACCA estimate that this case of goodwill, in this case, goodwill of 100 will be charged against the profit per period to allow for the loss for future sales regardless of the number of customers that are turned away. Depreciation charge would be 200 per period for small, 300 for medium, 400 for the large van. As it is past very aggressive in its decision making, pressing ahead with a rapid growth strategy. However, its manager have recently grown more cautious as the business has been more competitive. So we will come to this sentence once again. Let's first read the requirement. The first requirement is explain the principle behind the maxi-max, the maxi-mean, and the expected value criteria that are sometimes used to make decision making in the uncertain situation. See, this 5 marks is very easy. Why? Because there is simple. You need to just put off your knowledge in the examination. There's no application of the knowledge. They are simply asking, the book is the technical part. They want to know what is the principle behind maximus, maximean, expected value. There is no any application of knowledge. It's very easy mark, 5 marks. So if you know the rules of maximean, minimax, just write it down. I'll show you how. Let me type the first and I will come back. These are my answer like for part A. So when business face uncertain future outcomes, they can use different decision making rules. Three commonly used approach are maxi max, maxi mean, and expected value. So basically, if I have to talk about maxi max, so what I will say, the maxi max approach identify the maximal possible benefit for the each of the option available. Okay, so for each option available. All right, and select the option with the highest among this. So high or that will generate highest profit to the company. So it reflects an optimistic or risk-seeking attitude, assuming that the best thing will happen. So in this way, you can write the principle of maximax. So if I have to talk about the maximin, again I will say this approach look at the minimum profit from the each option available to the company, and that could generate and okay, they will look for the minimum profit each option could generate and choose the option that which are generating the highest of those minimum value, right? So if suppose we have chosen the minimum 110, 20, 30, so among these whatever the highest value is, we will go with that. So what kind of behavior this approach is reflecting? It reflects pessimistic or risk averse attitude, preparing for the worst case scenario. In this way, you can draw up your answer. Now, if I have to talk about the expected value, this is the probabilistic approach that calculates weighted average possible profit for the each option available based on the likelihood of each outcome occurring. So, remember the probability things? Yes. It represents a rational and balanced approach to decision making, combining both risks as well as reward. So this is for the 5 mark. It's enough. We have just explain the principle. There is no application to the scenario provided, right? So if we talk now, let's move towards the requirement B. Prepare a profit table showing the 6 possible profit figure per period. So this question is very interesting now. Now it's for the 9 marks. It's for the 9 marks, and let me show you how to solve this question. Okay. So in the question, sorry, they have provided the demand. Let me write down. To be. All right. So we have provided with the van. There are three type of van, as you know, and there is demand, and I will write down here calculation. Right? Is it okay now? Yeah. Now, what are the type of van? There is large van, medium van, and a small van. Isn't it? Yes, there are three type of van. And one more thing. What is the demand? For the small one, it's 100, right? And for medium one, 150, and the large one, it's 200. So now we will write down capacity as well. Capacity is 200. And if we talk about the medium, it's 150. And for the small, 100. Right? So what is the demand now? Demand is 120 or 190. So that means if I have 120 demand for the large capacity 200, what would be the profit? And similarly, I will repeat one more large and small capacity, just make large, medium, and small. Now this large capacity will be for demand 190 because there are two demand provided, right? Similarly, for the medium, we will repeat these things. So medium capacity 150, but demand would be either 120 and 190. All right. And similarly for the small capacity, yes. So there is 120 demand and 190. Now we will move toward our calculation part, right? So what is the revenue? What is the revenue that we can generate from the large capacity having 200, I mean large van having capacity 200 and when demand is 120? So what do you think? If our capacity is 200 but we only have a demand of 120, so there is still 80 remaining in our vacant in our there is space vacant in our van for the 80, right? Because I mean to say 80 is unsold item, right? So we will only sold 120, so our selling price will be 120, and I mean total revenue we generate selling the 120 carats, so selling price was 10. I hope you got this point. So what I mean to say, our demand is 120 but we have a capacity of 200, right? So that means 80 is unsold, it's still remaining in our inventory, right? We have a but we only have a demand of 120, so that's why we will sold 120 only, and the revenue will be 120 into 10, right? Now let's move toward the variable cost. What is the variable cost? Variable cost is 4. We sold 120, variable cost is 4. But if you remember, the question also said if your capacity is more than demand, then the variable cost will be lower by 10%. Remember here? Yeah. So that means our variable cost will decrease by 10%, and that is 0.9. All right. So now let's do the calculation. That's your 120 into 10, and your variable cost will be 120 into 4 into 0.9. So 432. And remember the depreciations? Yes, there is depreciation as well mentioned in the question. What is the amount? Yeah, it's 400 for the large van. So minus 400. So how much profit we have generated here? Yeah, so we generated a profit of 360 from the large van having capacity 200, but demand is only 120. Okay, so we have done one part. It's easy now. Now let's move toward the next question. All right. So we have done one part. Now let's move toward the large van. But again, now demand is only 190. Everything will remain same. No issue. Everything will remain same. Okay. So now we will our capacity is 200 and but demand is 120, so 10 is remaining as well, remaining. So as we will only sold 190, so now this time it will be 190 instead of 120, and 190, right? So very again the capacity is lower than the demand, so variable cost will be decreased by 10%. So we will only just replace 120 by 190. All right. Now again depreciation will be 400. Now in this case our profit will be 816. So here we will also mention that our capacity is greater than the demand. So variable cost fall by 10%. So we can just write down the notes, right? Why we are decreasing the variable cost. All right. Okay. Now this will be same as here as well. All right. Now we will move toward the medium size capacity. And I guess everything will remain again same. Yeah, we'll just copy paste it. It's very easy once you will set up the format to copy paste everything, right? Yeah. Yeah, so now we have a van type of medium and its capacity is what now 150, but again demand is only 120, so we will only sell 120, so revenue will be same, right? And variable cost will also be same because demand capacity is more than the demand, as we have written down these notes here in above too. All right. Okay. So, and but depreciation will be different. Why? Because if you remember for medium, it's 300. So now depreciation will be 300. And now our profit is 468, right? This is for the medium one. So now we will again do calculation for the medium one, but this time demand will be 190. Okay. So now our capacity is 150, but demand is 190. So we are unable to fulfill our demand. So in that case, revenue will be the same, no issue at all for the revenue. Just a second. Sorry. Revenue will not be same because our capacity is now 150. So we will only able to sold 150. Sorry, it's my fault. So it will be 150. Okay. And again variable cost will be 150 into 4, but this time we will not provide the 10% discount because capacity is not greater than the demand. So 150 into 4, 150 into 4. Okay, and depreciation will be 300. Yeah, so now my profit is 600. All right. But one more thing, the question says like if your capacity is less than the demand, in that case your customer will turn away. So turning customer means you will have to charge goodwill of 100. Remember this point? Yeah. So asset is concerned that if demand for the carrot exceed than the capacity of the van, then the customer will have to be turned away. And asset estimate that in this case goodwill of 100 would be charged against the profit per period to allow for the future sales regardless of the number of customers that are turned away. So that means here we will have depreciation plus goodwill charged. So 300 minus 100. So that will give our profit of 500. All right. So basically, if your capacity is more than demand, your variable cost will be lower by 10%. But if your demand is more than capacity, in that case, you have to charge the goodwill of 100 against profit. That means you need to expense it out. Okay. Now, a small one. For small one, let's do the calculation. Our capacity is 100, but demand is 120, right? So that means okay. So our capacity is 100, which is less than the demand. So 20 demand remains unfulfilled. So here we will have 100 into 10. So our revenue will be 1000, and variable cost will be 100 into 4. That's a 400. Now it's time for depreciation. Depreciation for the small is 200 and plus 100 our goodwill charge. So that will give us total expense, or I mean depreciation plus goodwill of 300, right? So our profit is 300. Now let's do the calculation for the small capacity, but this time demand will be 190. Yes. So now again, our demand is more than the capacity. So some demand remains unfulfilled. So we will only able to sold 100. So 100 into 10,000, 100 into 4, it's for the same. And for depreciation part, again, it will be remain same, because obviously depreciation is 200, and as our capacity is less than the demand, so we need to charge 100 of the goodwill as well. So this will give the 300 in the total, and the profit will remain 300 as well. So this is how we have done our part 3, and my presentation is also I think very well. So what you can do is to make it more professional and like impress the examiner. So as I have mentioned this point here, so now for this part you can write down, just wait, our capacity is less than demand, right? So variable cost will not fall by 10%, but but goodwill fall by 10%, by 100, which is charged against profit as per question given. So now we will copy paste this in every of the points. I mean this one and this one as well. So yes. So this is how our presentation will looks, and or additionally you can, what you can do is just put this negative value in the box. Yes, and one more thing you can do is just add the comma, because to look it's a like numeric figure, I mean monetary value, right? Yes, this is how you can present your answer in the exam as well. So I hope this part is clear now, right? So this is how you can solve this kind of question, and I think there is one more requirement, so let's solve that part and we will wrap up this question, right? Okay. Now, what is the next part of the question? Using your profit table from the B above, discuss which type of van assets should buy, taking into consideration the possible risk attitude of the manager. And this is again for the 6 marks. See, let's do that. So, part Tina. Okay. So we have three approach, right? What is that? Maxi max. Then we have maxi mean, and we have expected value, right? For the maxi max, what we will do, so we will take for the first maximum option from each of the van, and then again we will choose maximum of that. That means if we talk about the large one, what is the maximum value among these two? 816. Let me highlight this. And again, if we talk about the medium one, which one is the highest? 500, right? And if we talk about a small, you can go for anyone. 300 is the like in the both of the cases. Now, among these three, we will again go for the highest, and which is 816. So that means we will go to buy large van, right? So you can show this part here. Okay. Then next we have Maximin. For maximin, we will first choose the minimum one. Okay. We will first choose the minimum one. So what is the minimum among the largest? This one is the minimum. And for the medium, which one is the minimum for the medium? 468. And for small, you can go for any option because value is same. Now among these, what is the maximum? Because it's a maxi mean. So now from the minimum, we have to choose the maximum. So maximum is 468. So we will go with the medium van, right? And now expected value method, we need to do calculation because I think probability is given already. Yeah, for 190 the probability is 0.6 because the higher demand figure having the probability of 0.6. So that means for 120 it will be 0.4. Remember I told in the previous video, in case of probability it should be equal to 1 or 100, right? So if we talk about the large van, so what would be the probability? The first value is our 368 and we will multiply it by 0.4, then add this 816 into 0.6 because it's for the higher demand, and this will give us the probability of 636. And for the medium again we will perform the same calculation, that for the 120 we will multiply by 0.4, and for 190 we will multiply by 0.6. That gives us value of 47.2. Now for small one again we will do the same. We will take the 300 for the small demand, lower demand, and then we will multiply by 0.4, then add, then we will take this value and multiply by 0.6. That will give me 300. So out of these three, which one is the highest? Large. So we will go with the large option in case of the expected value. But these are the things, option for the 6 marks, so you just cannot write directly that assets should go with this branch. So you should have a little bit analysis part, like as they have provided the three option, so have explanation like in which case the assets should go for this one, and in which case this one, and in which case this one, right? This option. And the last you can just provide like the discussion which type of van that asset should go, because you can mention that in the scenario that the asset is very aggressive in the decision making, pressing ahead with rapid growth strategy, so they should go with that this van. At last you can make a suggestion, but you before that you need to provide explanation. You need to discuss how they should choose the van. So let me show how. This is how I have drafted, like obviously, this decision to choose which type of van will depend on how much the risk the manager of assets willing to take. So, if they are optimistic about the future and want to earn maximum profit, highest possible profit, then they should use the van. They should use the maximax rule, and that suggests choosing the large van because it gives the highest profit of all the options available, right? So in this way you can explain for the maximax. Now it's turn for the maximin. So for maximax, maximin, so I have drafted like if they are pessimistic and want to be at the safer side, they should look to the at worst possible outcome. So that means using the maximin, they should pick up the minimum van because it's a worst case profit is 468 and is better than the other one, right? You can write for the maximin in this way. Next we have question. It has been mentioned that asset managers are now becoming more cautious. If you remember the point, the last one, right? More cautious. So though they are aggressive, but they are more cautious as the business has become more competitive, so they will likely to prefer the they should go with like a maximin method. This means medium van is better option for them. Now if we talk about the expected value, so we can also calculate expected value, which show the average profit based on chance of the demand levels. We have previously done this calculation, remember above? Yes. So this is for the expected value. Manager can go for the expected value as well. So you can mention like, since the asset is not buying just one van and will use them regularly, using the EV method makes the sense as it looks at the long-term average profit. Our final conclusion will be In the end, the financial choice will depend on how careful the manager of assets wants to be and the risks they want to take. But based on their cautious attitude now, the medium van seems to be more sensible and safe option. The small van is not good option at all because it gives lower profit in the all situation. So this is how you can provide explanation. We have covered these 3 points. Along with that, we have make the discussion like, okay, this thing will be good, this thing will be bad, this thing will be happen. We have discussed everything here. So this is how you can approach for this kind of question. I hope this video is useful for you. And as I said, if you have any specific question, please mention the question name, because by looking by myself to the kit, obviously I find this one, and I will again look for the another question which is related to the risks and uncertainty. So it may take a time for me because time is very less, exam is very near. So do let me know the specific question name so that I could focus on the same. Thank you so much, guys. Have a good day.